Hi, Lee Phillips. I want to talk to you about joint tenancy. They call it joint tenancy with rights of survivorship. What it is it's avoidance of probate. And people have bought property together as joint tenants, husband and wife. I mean, you walk into the title company and they say, how do you want it? And you say, well, we want it so we both own it. And they say, fine, joint tenancy. If one of you dies, the other one owns it instantly. You don't even miss the guy at breakfast. You own the piece of property. That's the way joint tenancy works to avoid probate. However, joint tenancy is a disaster. I'll let you use it between husband and wife. Yeah, maybe. However, never put your kids' names on anything as a joint tenant. And they call the lawyers, everybody even says, well, the way you do it is you bring your son in, your oldest son, and you put his name on the deed to the house. Let me tell you what happens. When dad's dead, mom brings the oldest son in, puts his name on the deed to the house because they want to avoid probate. What happens is first of all, when mom put the kid's name on the deed, she gave him half the house. The word gave is a giveaway there. There's a gift tax. You can give somebody, what, $14,000 a year now. It goes up each year with the cost of living in $1,000 increments, but 14 grand. You can give somebody $14,000 and not have to worry about a gift tax. Well, I'm sorry, half of mom's $300,000 house is $150,000. You just gave the son, not $14,000, $150,000. You have to file a gift tax return. You didn't do that, did you, Mom? Nobody ever does. Well, the IRS figures it out someday down the road. Now, there may or may not actually be a tax owing because you have the unified tax, estate tax, gift tax, unified, so there probably won't be any actual money, cha-ching, coming out of Mom's bank account, but there was no gift tax returned. Let's look at another aspect of it. The son now owns half the house. His name's on the deed. That's his asset. 50% of that house is his asset. When he gets divorced, when he declares bankruptcy, Mom lost 50% of her house. She either buys out the 50% or she gives up her 50% in a fire sale. And it does happen. I have a good friend, started kindergarten with him. That was a while back. And he was a contractor, and funny thing is, contractors go up and they go down. Well, they went down, then brought this kid in, man, put his name on the deed to the house, wanted to avoid probate. And when he went under in his contracting business, Mom and Dad lost their house. The family house that I remember playing in is gone, as far as Mom and Dad's concerned. Somebody else owns it. So the asset becomes exposed to every one of the joint tenants and their liabilities. They don't pay the taxes. The IRS comes and gets that asset. They take it all, even Mom's half. Interesting. So don't put the kids' names on because it's a liability. There's a tax problem too. When Mom dies, the house is worth $300,000. It gets a step up in basis to the value of the house on the day Mom and Dad died. I mean, Mom and Dad, they bought the house 50 years ago for $25,000. Today it's worth $300,000. So there's what, $275,000 in gain on that house. Well, when you give somebody a gift, they have to take the original basis when they go to sell the property. So technically, Mom's half of the house gets a step up in basis when she dies. So her half is worth $150,000. The other half is not going to get a step up in basis. It's worth, what, half of 25 is 12.5, $12,500. That's the kid's basis in his half of the house. So it's now worth $150,000. He has to pay capital gains on the difference between the $150,000 and the $12,500, his half of the house. that capital gains will be paid when the house is sold the week after mom died. So whatever the capital gains tax is, the son is just out on the order of what, 15 grand, something like that at least? $15,000. It's a joke to me. So, you avoid probate, that's true. Instantly, the other joint tenants, or maybe more than one, they own it when the other joint tenant dies. However, you have the gift problem, you have the step up in basis problem, you have the liability problem. Don't put somebody's name on as a joint tenant. It doesn't work. So, this is Lee Phillips. Yeah, I'm an attorney, don't hold that against me. Talking on the concept of joint tenancy, and the answer is no.